How's it going, everyone? My name is Dan, but you can call me Malone. And did you know that 86% of Irish people say that the reason why they don't invest in the likes of the stock market is because they're afraid of losing some or all of their money? That's according to the recent Essential Guide to Investing, which was published by Bank of Ireland last month. Now, us Irish people, we're good at saving money. Part of that comes from the fact that we are obsessed with buying our own house and getting on the property ladder. And because of that, you have lots and lots of people who are hyper focused on saving up for a deposit on a home. However, when it comes to exploring options for our money outside of the safety of a bank account, we're not the best. Today, we're taking a look at investing culture in Ireland and the changes that need to happen in order for our generation and generations to come to be financially free. Drop a like and subscribe, and let's get started. So Bank of Ireland carried out a study where they wanted to find out the answer to the question, what do people in Ireland think about investing? First and foremost, only 23% of the population rated their knowledge on investing as good. Now, this isn't very surprising to me, as I think we're all aware of the pervasive lack of financial education here in Ireland, but that still doesn't make it okay. The issue with this is that if someone doesn't fully understand investing, they're going to be skeptical about its benefits. Us Irish people are notoriously skeptical of things that we don't understand and things that are new to us. So it's very hard for me to convince you that investing is worthwhile if you don't understand the fundamentals of investing in the first place. And because we're not doing enough as a society to reinforce those fundamentals, people are living their entire lives without ever being involved in the financial markets in a meaningful way. Now, it's very easy to point fingers at the education system and the government and expect more from them in terms of how they make this information accessible, and I definitely do think that there's more work that could be done here. But ultimately, it's up to each and every one of us to educate ourselves on investing so that we can work towards obtaining financial independence. On top of this, by understanding investing, we can make better decisions with our money and gain a true understanding of the opportunity cost associated with our spending habits. What I mean by this is that when you start becoming accustomed to investing and its potential to create lasting wealth over the long term, you'll find yourself questioning your spending habits and how they can be improved. Bank of Ireland discovered that the main reasons why people don't invest is because 86% of people are afraid of losing some or all of their money, 52% believe they don't know enough about investing, 47% are afraid of their money being tied up for long periods of time, and 41% believe they don't have enough money to start investing. Guys, all of these statistics are driven by a poor standard of financial education. The biggest reason why people aren't investing is because of fear and misconceptions. If you're not investing simply because you're afraid you'll lose money, then you're not looking at your money the right way. Consider the alternative, which is leaving your cash on deposit in a bank account. Interest rates on bank deposits are virtually zero, so you're earning no return on your money. It's just sitting there, and the only way it's going to increase is by continuously working and earning a salary. Now, you might say to me, Dan, I'm fine with that because at least my money is safe, but this isn't true. And the reason why this isn't true is because of the harsh reality of a little thing called inflation. You have to understand inflation and its effects on your money over time. The basic concept of inflation states that the money you have today will be worth less in terms of purchasing power in the future. So if your money is left sitting idle earning no return, then its value is going to decrease over time. So when people say to me that they don't invest because they're afraid of losing money, but yet they optionally choose to keep all of their cash on deposit in a bank account where it's subject to the effects of inflation, which will ultimately cripple them financially in the future, then it's clear to me that they don't have a fundamental understanding of the importance of investing. You also have to consider the fact that one day you won't be earning money anymore, aka when you retire, and you'll have to replace this loss of income in order to fund your lifestyle. Guys, it's critically important that you're thinking about this now. Believe me, I totally understand that it's hard to even think about retirement when you're in your 20s, and the idea of making sacrifices today for your future self is very foreign to a lot of people, but the principles of compound interest still apply. Whether it's through a pension fund, a personal investment portfolio, or a combination of both, you have to start building up your wealth for the future. The best time to start was yesterday, but today will do. Investing doesn't come without risk, and understanding the risks of investing is critical to success. However, too many people associate investing with stock market crashes and total wipeouts of pension funds. They base their entire opinion on the practice of investing on the worst case scenario, or the catastrophic loss as I like to call it. If you invest with a long-term mindset, are cognizant of your financial goals and overall tolerance for risk, and have a solid understanding of the fundamentals of investing, I'm telling you now it is not hard to achieve an adequate investment return. What's required is education, discipline, and control over your emotions. Remember, the goal isn't to achieve massive returns every single year, and people who think that is the goal are going to get burned. The minimum goal is to preserve our initial investment insofar as possible and earn a return that at least outpaces the rate of inflation. And there is no amount too small when it comes to investing. Look, to a certain extent, you do have to have money to make money, but you have to start somewhere. Time is your best friend when it comes to the stock market, and the more time you give yourself by starting early, no matter how small the amount, then the more benefits you'll get from the effects of compound interest over time. So what can we do today to ensure that our generation and generations to come at least have a shot at financial independence? Well, first of all, we need to start normalizing conversations around personal finance. Irish people don't like talking about money. It makes us feel uncomfortable, but we have to get over that. There's lots of people out there who want to talk about personal finance. They want to talk about starting a pension, and they want to talk about investing, but they feel like they can't because these conversations are non-existent in our social circles. And we automatically assume that it's a taboo topic simply because we don't hear those conversations happen. Now, granted, there has been a shift in conversation towards investing over the course of the last year, but that always happens during a bull market. The same thing happened during the dot-com bubble, the same thing happened pre-2008, and the same thing is happening now. When things are going good, people get interested. However, successful investing and building sustainable wealth over the long term is predicated on staying in the market even when things look bad. Everybody thinks they're Warren Buffett when things are going well, but when things go bad, all of a sudden investing is seen as a loser's game, and those who don't understand the fundamentals withdraw. This is the great hypocrisy of investing. Most people fail to understand that stocks become more risky, not less, as their prices increase, and less risky, not more, as their prices fall. So a true long-term investor will actually be looking forward to the bad times because it gives them the opportunity to pick up great companies at a discount. Apart from normalizing conversations, we as individuals have a responsibility to educate ourselves over the financial markets and then share this education with future generations. This is how generational wealth is created and preserved. Now, you might say to me, Dan, I don't have time for X, Y, and Z. I have a full-time job and I don't feel like any of this is relevant to me. Do you have cash in a bank account? Are you employed? Do you pay taxes? Do you ever expect to get a mortgage and buy your own home? If the answer to any of those questions is yes, then all of this is relevant to you. Whether you like it or not, you're a part of the financial ecosystem. And because of that, you need to understand how the ecosystem works and the rules of the ecosystem. If you don't, then how do you ever expect to achieve financial independence? Now, I do accept that the government and bodies like the CCPC have a lot more work to do around financial education. It shouldn't all fall to the individual. But until then, we all have to do our part in securing our financial future, because at the end of the day, it's in all of our best interests to do so. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.